Hello, everyone, and welcome to this webinar. It's great to have people joining us from all over the province and probably further afield as well. I'll just take a moment as everyone comes in and join us. Thank you for taking part and being part of this today. We're going to be having a very timely conversation and presentation on how Canadian small businesses can tackle trade uncertainty and tariffs in very uncertain times. I'm Matt Hill, Director of Operations and Client Services here at BusinessLink, and I'd like to welcome everyone and thank you for joining us. We've got a little icebreaker to start us off, a poll, which will show up on everyone's screen shortly. There we are. And it is, which area do you see most opportunity for growth despite this trade uncertainty? Trying to take a positive look at this. So is that there you see the opportunity of new domestic markets? Is there opportunity for exporting outside our borders to new international markets? Chance to product and have some product or service diversification, or strengthen supplier relations? Or is there anyone who falls into that bottom category of perhaps not seeing any opportunities right now? Well, hopefully, even maybe by the end of this conversation, we'll spur some thinking in that area. I would like to next acknowledge and respect that we're on traditional land, meeting grounds, territories, gathering places, and traveling routes of Treaty 4, 6, 7, 8, and 10, and the home to many First Nations, Métis, and Inuit people. In the spirit of reconciliation, we acknowledge the lands of those that have come before us, reside here now and in the future. So thank you all very much for joining us. Before we get started, I would like to just kind of highlight a couple of housekeeping things. So if we do have any questions today, the place to put those, you'll see at the bottom of your screen, it might be on the More button, is the Q&A. So if you really want to ask that question, make sure it goes there. I'm not promising every question that's asked will necessarily be answered, but I'll definitely take a selection and try and look for those kind of common themes that come up, or perhaps those things that apply to more people. So that's where you can put those questions. And also, following the webinar today, we always have this question, will I get a recording? And yes, you will. It'll be on our YouTube channel as well, so you'll be able to access that after the presentation today. You'll be sent an email with all that information. But next, really, it's heading into it. So firstly, I would like to welcome and thank Ruhi Ismail Teja for joining us from Calgary Chamber of Commerce for her presentation today. I'm excited to welcome her as our guest speaker. She's got a background spanning private, public, non-profit sectors and brings a well-rounded perspective to her work. She's the Vice President of Policy and External Affairs at Calgary Chamber of Commerce. She leads initiatives in policy development, advocacy, media relations, Indigenous economic reconciliation, and diversity, equity, and inclusion. Vast experience, and really we're very thankful to have her join us today. So Ruhi, over to you.
Thank you for having me. It is, as Matt mentioned, very timely and topical, and there's lots to dive into. So an hour will feel very quick, but we'll save some time at the end for questions. So as Matt mentioned, my name is Ruhi. I'm the Vice President of Policy and External Affairs with the Calgary Chamber of Commerce, and we've been following this issue very closely at all levels of government, and serving on the Mayor's Tariff Advisory Group and the Alberta Trade Council, as well as the Forum on Canada-US Relations. So area of expertise is really around policy, so I'll dive into that. But the theme for today, as you know, is around building resilience in uncertain times. And so we'll spend the first half of the webinar talking about the uncertainty and hopefully being able to alleviate some of that and provide a little bit more clarity on where we're headed. And the second half will be around resilience and being able to dive into some of the actions and resources about just what to do. So off the top, some context setting. I know we've all been following this issue incredibly closely, but wanted to talk a little bit about the Canada-US relationship off the top. Each day, the US and Canada trade $2.5 billion in goods and services across the border, which is nearly $1 trillion US per year. And a lot of that is actually within firms. So part of the disruption that we're seeing is about the way that a single firm does business, trading back and forth across the border. There's also considerable labor that's involved. Obviously, Canadian companies employ almost 1 million workers in the US and about the same proportion in the US, where nearly 8 million US jobs are tied to trade with Canada. So given the size of our economies, we actually see that the trading relationship matters in similar quantity for Canada and for the US. And the last piece I'll highlight is that the US sells more goods to Canada than any other country, and Canada actually buys more goods from the US than China, Japan, France, and the United Kingdom combined. So both ways were very important trading partners for each other. Also wanted to take a moment to talk about what tariffs actually are. We've come up to speed on this so quickly, and I know many of you are following it quite closely, but wanted to just break down some of the basics. Tariffs are effectively when a country places a tax on foreign goods and it's paid by their residents or citizens. And the goal is often to encourage the purchase of locally made products. We have lots of long-standing tariffs that are in the neighborhood of 2 or 3% that have been fairly uncontentious for a long time. Tariffs effectively make the price of local goods appear more appealing to consumers, not by actually decreasing the price of the local goods, but by increasing the price of foreign goods. So in theory, people change their buying decisions, or businesses might choose to even relocate their operations to the country, placing the tariffs to be more competitive. And the theory is that that should make the country more self-sufficient and drive the local economy, lead to booming industries, and reshore or have companies migrate their operations to that country. But of course, like many things in life, it's not actually quite that simple. There's a few things to consider. One is that there might not actually be the local substitute. So consumers may end up still buying foreign goods, they just pay more for them. We also know and have heard lots in the news that goods go back and forth across the border, and in some cases 5 or 8 times. We think of the auto sector back and forth between Detroit and Southern Ontario, as well as the agriculture sector. There's considerable back and forth, and so that cross-border makes a big difference to the effectiveness of tariffs. Retaliatory tariffs also mean that the cost of everything goes up. And so, for instance, in the US, Canada retaliating actually means that US firms are less competitive in Canada, and that has a blowback effect for American companies. Countries may also not actually have the ability to produce the goods when we think about access to inputs. So things like critical minerals, if the country doesn't have the requirements to be able to produce the good in question, they may not actually be able to move, companies may not actually be able to move their operations. Another piece to consider is around labor. And so the US right now has about 4% unemployment. And so there's major concerns from companies there that even if they did actually move their headquarters or their operations to the US, there wouldn't be the resources from a human capital perspective required to actually support the businesses. We also see that sometimes local companies will increase their prices, not to the same level of tariffs, but for instance, a local company may see that a foreign owned company the price has gone up 25% in the case of a 25% tariff, so may choose to increase their price 10% and ultimately would still be competitive, but the consumer would lose out. And the last point I want to make here is around competition and the fact that when we decrease the size of the playing field, competition actually decreases because it's only local competitors as opposed to having an international market, and that inhibits innovation broadly. So how did we get here? There's a lot of tariffs that have been tabled over the last several months, a couple of months at this point. And so we have green check marks beside the tariffs that are still in play. And so while we were spared, Canada was spared last week from further tariffs, there's still several in place, both from the US and actually from China as well. The other thing to point out is there's the imposed by and imposed on columns there. And that indicates just how much retaliation has been happening. So we see a lot of back and forth, and some of the retaliation has been quite effective at avoiding tariffs. So for example, electricity exports from Ontario caused a seismic shift. But we have seen that conversation continues. On April 3rd, we saw a major shift towards being a more global trade war, and we'll get to just how that impacted the markets in a couple slides here. But from a global perspective, we're actually seeing that it's not just about Canada and the US and Mexico. It's actually broader, and many countries are in fact not imposing retaliatory tariffs because they're so costly, which is certainly interesting to see. And it's the EU, China, and Canada who have currently retaliated against the US. It remains to be seen whether other countries will in fact join that, but many are quite hesitant because of the nature of retaliatory tariffs actually being imposed on their own residents. In the past few days, we've also seen an increasing shift towards a US-China trade war, with the two superpowers announcing escalating tariffs. And it'll be interesting to see how that plays out and whether the US is more focused on tariffs with China and whether Canada actually takes a backseat. So that's something we're watching quite closely as well. And I also want to just note that we've been monitoring tariffs both as the Chamber and a lot of other organizations since Trump first announced this potential issue back in the fall. And so governments, organizations are very well prepared to be dealing with this. And we'll talk a bit more about that as we get into the resources section. And to level set on the economy and the significance of this on Canada's economy primarily, I'll start by talking about business sentiment. And this shows how businesses are feeling in the moment. And so we see that business sentiment has dropped considerably in the last quarter alone. And it's uncertainty more so than the tariffs that are actually causing this level of sentiment. We're seeing more stranded investment and lower confidence in our economic future. And some of this uncertainty has happened even before tariffs actually came into place. It's a threat of tariffs that have impacted this already. As I promised, we talk a bit about the decline of the markets. We've obviously seen that as top of mind over the last few days in particular. And the S&P 500, which is Wall Street's main barometer of health, was down 1.2% yesterday afternoon alone, which now brings it to almost 20% below the all-time high in mid-February. Similarly, the Dow was down 12% since just last Wednesday. And since Trump unveiled the tariffs late last week, S&P 500 companies have lost almost $5.8 trillion in value in the stock market. And that's a record 4-day decline going back to the 1950s. And this matters obviously because lots of us are watching our own portfolios, but also generally because we're seeing an increase in the advocacy happening within the US around tariffs. And so many CEOs and business leaders south of the border have been quite careful to not talk about tariffs. And this is quite likely a major tipping point for us in terms of the advocacy happening within the country, and potentially and a lot more pressure on the president to reverse tariff decisions, or at least have a pause for a period of time. So what's behind all this? We surveyed our members recently and have found that these trends hold across the economy. It's interesting to note that the number one concern for people is around the economic decline and reduced consumer demand. It's actually less about the price of the tariffs themselves as it is about the uncertainty. And that shows up as hiring decisions, expansions being paused, less spending money, which are all of the things that usually feed into a downturn. And so it's that uncertainty that we're focused quite heavily on over and above the tariffs, and anticipate that even if the tariff issue is resolved in the near term, we'll see that uncertainty persist. Of course, that said, costs matter a lot too, and some sectors will be hit harder than others. Because of steel and aluminum tariffs, auto manufacturing, construction, and other sectors are being impacted. We could see that even hit the price of homes and major infrastructure projects, given steel and aluminum are core inputs. We've also seen that agriculture has seen tremendously high tariffs, both from from the US and from China. And of course, Trump specifically called out softwood lumber and supply management recently last week during his April 2nd address. We also know that consumer goods and food and beverage are likely to see an impact, but for slightly different reasons than manufacturing and agriculture. And those are largely because they're discretionary sectors. And so while there be some impact related to the cost of tariffs, we see that consumers are pulling back on their spending and are watching quite closely that areas like consumer goods, food, beverage, travel, tourism are seeing a larger hit at this point as well. Consumers will, of course, also face increased costs. We initially had estimated that it would be approximately 25%. Initially estimated that with a 25% tariff would be nearly $2,000 Canadian or $1,300 American, which are roughly the same value. So would hit consumers similarly hard on either side of the border. And that would be about a 5% impact. But now, with tariffs appearing to be more targeted, economists are generally predicting that it'll be closer to a 1% hit. So the impact to businesses is really likely to be more significant to businesses than to consumers. It, of course, depends on the decisions that consumers make to hold on to brand loyalty or swap to lower price goods on the extent to which they'll see that impact. But I also want to highlight that it'll likely feel more like 3% because usually in our economy, we aim for a 2% inflation rate. And so with the 1% increase in CPI, we'll also have the inflation added to that. And on that, with prices increasing, most businesses actually expect inflation to tick up. And you see that in that blue line there, which asks just on Monday whether business owners expect prices to increase and the extent to which that'll impact inflation. So the blue line is just 1 year ahead, where we do anticipate quite significant inflation, but there's a sense that inflation will steady 2 and 5 years ahead, which are the yellow and green lines respectively. So anticipate a fairly short-term impact to prices that could moderate in the long term. Some economists are also bracing for a stagflation, which is a combination of seeing price increases or inflation combined with low economic growth. And that's not a great scenario because it means a poor economic environment coupled with high unemployment as well and high cost of goods. It's also difficult to fix because central banks will usually raise their interest rates to combat inflation, but usually lower interest rates to combat a recession. And so we end up stuck in this situation of having both high inflation and low economic growth, and a difficult problem to be able to kickstart our economy in that situation. In terms of costs and what we're already seeing, we're seeing some of this manifest. And at this point, mostly businesses are bracing for things to get worse. So those darker bars on both the green and the red indicate what's already in place, and the lighter shades are what we're bracing for. So we've seen some impact to input costs already, but see that businesses anticipate we'll see much more. And similar on sales to the United States, that has dropped in many cases, but businesses are generally bracing for that to get worse as well. Investment to Canada is interesting. That really points to the uncertainty that we talked about, and we've seen the investment already slow down because it's largely driven by the lack of certainty on next steps rather than the direct cost of input. So that's often one of the first signs, and we're seeing that here now. The Bank of Canada gave some indications earlier this year that the interest rate would be likely to stabilize, and has since changed their mind because of tariffs. So with the cost of goods rising again, rates were cut last month, and Governor Macklem has indicated that we may in fact see further rate cuts. And that would mean we'd see a bit of a yo-yoing of the interest rate, but ultimately indicates that there'd be more concerns around a recession. I want to take a moment to talk about our exchange rate. The Canadian dollar is not up from last week, which is contrary to a lot of the news. It's actually more so that the US dollar is down. And so it's in fact not that Canada's dollar is performing better. It is relative to the US, but it's more of a sign of where the US dollar is trading. There's a lot of implications of exchange rates for our economy, and there's some pros and some cons. On the plus side, for economies like Alberta in particular that receives commodity prices in US dollars, we're actually cushioned because with the exchange rate, we receive a higher price in Canadian dollars for our goods. It also makes Canadian goods and services appear cheaper, which actually softens the cost impact of tariffs. So we see that for things like tourism, where we may still see US travelers come to Canada because their dollar goes so much further. And so that may potentially see a lift. Of course, there's also downsides to having a low exchange rate. Our exchange rate has hidden productivity challenges for a long time. It also makes it more expensive to source US goods, and so firms here have reduced purchasing power if they're trying to procure goods from the US. And the lower Canadian dollar also makes our trade deficit appear larger, which historically has not been an issue, given a trade deficit hasn't historically been seen as something that is necessarily positive or that's inherently positive or negative. But at this point, with lots of conversation around trade deficit, that has shown up as being more important. Moment to talk about supply chains. And this is interesting because it speaks partially to consumer behavior. There's a real interest in expanding to new markets, as many of you maybe answered on that first survey question off the top. Some of the limitations around expanding into new markets are related to our ability to access supply chains and actually move goods from one place to another. We also see that where companies have access to capital, there's a lot more stockpiling. People are buying goods that they may resell or use as inputs now before tariffs potentially come in, impacting their goods directly. And part of that means that we're seeing rising transportation costs due to the future uncertainty, and that's also creating unpredictability in our supply chains. A quick note on small businesses. Small businesses at the Chamber for us are incredibly important. And they're also important to the Canadian economy. They're responsible for 42% of Canada's exports to the US and 41% globally. And the majority of Canada's small businesses are small. So this trend in really low, I believe lowest on record optimism from small businesses is very worrisome. And I anticipate many of you are feeling this way. So good to know that you're not alone. But as I mentioned, we'll talk about some resources on how to address this. In terms of optimism and sentiment, consumer sentiment has also changed considerably, with 2/3 of Canadians planning to shift their purchasing decisions, buying less from the US. We see this show up in flight bookings, with fewer Canadians going down to the States, Canadian retailers reporting an increase in buying local themselves. We're also hearing from US businesses that their products are starting to be turned away from Canadian shops who have decided to move towards Canadian. And the numbers here are showing that as well. Canadians, no surprise, are buying Canadian. And that means local companies are the beneficiaries of that. We've seen lots of buy local campaigns, and the impact to many Canadian companies we anticipate is actually being mitigated by the efforts of people to buy local. The sentiment is also really important because it indicates how likely we are to see a turnaround. Sentiment changes a lot slower than policy, and particularly now than trade policy. And with consumers changing their behavior, even in cases where there are no tariffs, we expect that the Buy Canadian sentiment will continue. And that means that even if tariffs were to lift, we'd likely see the move towards protectionism and reshoring right across the world. So I've talked a lot about the economy and where we are, and hopefully that helps uncover a little bit of the what's going on and demystifies a little bit. And so in terms of going forward, as we talked about, there's lots of trade policy uncertainty. We anticipate the market volatility will continue, but I will say we've been through this before. And so while market volatility is very uncomfortable to be in many cases, it's a hold on to your hat approach. We will get through this. We have before. We're in a major global market reset, and we'll talk a bit about that in the path forward. That comes with opportunities. It also obviously comes with the uncertainty that we're seeing. We also anticipate increased pressure on prices to last, as well as the interest rate cuts to continue to hopefully help us avoid a recession, or at least have one be short-lived. I'll now dive into the path forward, which is a little like pretending that I have a crystal ball, but we'll talk a bit about what governments should do and perhaps offset the gloomy picture of the economy with the tremendous upside that actually lies ahead for Canada.
Yeah, Ruhi, just before we kind of
Absolutely.
dive into that next section, just for clarity for people. So when we're talking about tariffs, we're talking it's products that kind of cross the border. Lots of the business owners that BusinessLink deals with, service providers, or they are using services from the US, cloud services or accounting or various services. Are they impacted by tariffs, or not?
Yeah, absolutely. We are seeing that many will be impacted by tariffs, but in some cases, a little bit more predictably or less back and forth. So part of the challenge with goods is that so many go back and forth. The agriculture sector, for example, processing related to cattle products often cross the border 5 times. So they see an 125% impact from a tariff perspective, whereas with services, we may not see that same level of impact.
Okay. Yeah. Okay. That's awesome. Thanks.
Good question. In terms of what governments should do in the immediate, our view is very much that in the short term, there needs to be a focus on risk mitigation. And so firstly, obviously, the Canadian government has been steadfast on working to get tariffs repealed and using really all tools in the toolkit, including retaliatory tariffs, to be able to do that. Secondly, to mitigate the impacts to our economy, including using tariff revenue to support people and businesses. And so unlike pandemic-related supports, the government actually has an inflow of money from the collection of tariffs that can be recycled to use this. For instance, things like EI supports have already been tabled to ensure that businesses and people are well cared for. Next is around support access to capital, and we'll talk about some of the resources that already exist. Streamlining the regulatory environment and making it easier to do business. There's a real appetite from governments at all levels right now to make Canada, Calgary, Alberta, the best places to do business. And so if there's ways that your government can support you, there's a real willingness right now to hear those opportunities. The last is around attracting talent in tourism. We've already seen and heard reports of Americans looking to come to Canada, as well as I mentioned, with the dollar, perhaps being able to attract tourism either from the States or increase tourism from Europe or other markets that often goes to the States. Longer term, there's a lot of opportunity for Canada on several of these areas, and I'll go into a few in particular. Internal trade barriers have gotten a lot of traction recently, and Canada, for good reason. Canada's interprovincial trade barriers are the equivalent of a 21% tariff. And so when we think about the magnitude of American tariffs, there's a lot that we can be doing right here at home to streamline our ability to grow at home. And just for context, the 3%, this is pre-tariff data. And so Canada's interprovincial trade barriers are about 21%, and the US pre-tariff was 3%. And that's part of why Canadian firms have traded so much with the US and why we have such interconnected economies. It's often been easier, particularly for small businesses, to expand into the US than across the country. And we see that means we see that in the data, interprovincial trade has dropped from 50% to 40% relative to international trade. So there's much more of an appetite to go external. And we also see that several provincial and federal leaders have raised the profile of this issue, and so anticipate that there is a tangible opportunity to be able to see movement on this issue.
So those, sorry, just to kind of dig in
Yeah.
that. So that would be, I was watching the National the other night and they had a Medicine Hat beer maker on there, and he really wanted just to get his beer sold in Swift Current, which is, an hour down the road in Saskatchewan. And he's kind of saying, well, it's not possible because I got to take that beer from Medicine Hat, send it to Edmonton. Edmonton's got to go to Saskatoon, and then Saskatoon would distribute it. So that additional cost of the logistics, etc., that's kind of would be the 21% equivalent. Is that what we're kind of saying?
That's exactly right. Yeah. And a great example of where we've seen this be streamlined recently is first aid kits. Every province used to have different requirements for what was considered a first aid kit appropriate for a work site. And they've since streamlined. So one first aid kit is okay. You don't need two if you're operating in both Alberta and Saskatchewan. And so there's lots of examples like that are just embedded in business. And our view is ultimately there's the path forward is around mutual recognition. And so for policies and regulation to work more like driver's licenses, where we say if you can drive in Alberta, then you can drive in Saskatchewan, and we don't need you to go through a second test or have a nationalized driver's license. We just decide if it's good enough over there, it's good enough here. And so being able to even understand what all of those barriers are is a considerable amount of effort, but there's a real appetite towards it right now.
It's interesting. Yeah, even in lots of people we that get in touch with Business Link, they extra provincial incorporation becomes something even, and if they're a small business, maybe this is two or three people, if they want to go and do, have an operation in Saskatchewan, they would need to go and extra provincially incorporate, kind of double their paperwork by having that presence there. Yeah,
Yeah,
it's fascinating. Yeah,
yeah,
awesome. Thanks.
exactly. And there's also lots of trade irritants that we still have to deal with. And this is particularly important ahead of a CUSMA or USMCA review. That has to happen before 2026, but could happen at any date. There's no specific time. So it's really important that Canada get ahead of a few trade irritants that the US has been particularly impacted by. So for instance, the Digital Services Tax Credit and Online Streaming Act disproportionately are seen to disproportionately impact the US. So large companies like Netflix and Meta have been impacted. Defense spending has been top of the news in the last several months. And so Canada reaching a 2% commitment. We're even seeing some countries pledge higher, but obviously it's a trade-off between Canada's fiscal picture and what we're able to do in the short term. And supply management, as I mentioned, Trump talked about that even as recently as last week at the Rose Garden. So some of those we anticipate will likely be on the table, particularly once the federal election is over. And so if your business is likely to be impacted by that, then to monitor that closely as well. I'll mention domestic policy and our productivity landscape as well. There's Canada's productivity problems have been long-standing and significant. And when we think similar to interprovincial trade barriers, how much they impact our economy, Canada's actually lagged, I think, second only to Luxembourg among OECD countries in terms of our GDP per capita growth. And the impact of low productivity is much more severe to our own economy than tariffs or trade policy. So there's a lot of domestic work that we can be doing to actually move the needle on our productivity to have a stronger economy locally. And this graph just shows how many Canadians are actually concerned with the productivity crisis. So 78%, almost 4 in 5, believe that Canada's productivity is a problem. So we anticipate that that will stay top of mind for governments as well. And along the lines of that, regulatory concerns remain a considerable challenge. Most Canadians are not satisfied at this point with the efforts to streamline regulatory processes. And Matt, exactly to your point around interprovincial trade barriers, those are great examples of some of the regulatory challenges that we anticipate being resolved. There's lots of upside, as I mentioned, and tariffs have actually opened up opportunities beyond the US. Last week, 90 countries received Liberation Day tariffs, and Canada is well positioned to capture some of the US market share that came from that. Canada has trade agreements with 51 countries, and that represents about 3/5 of global GDP. So we're really, really well positioned. 35 of the 90 countries that receive Liberation Day tariffs are ones we already have a relationship with, and there's some more that we're in the process of renegotiating trade agreements with, like the UK, that aren't on that list of 25. And so the countries that have had their trade disrupted by the Liberation Day tariffs present an opportunity for Canada to show up in those markets. So in terms of actions and resources and where we go from here, and exactly to the point around new suppliers and the international markets that open up, we of course encourage people to think about domestic supply for a few different reasons. Obviously, supporting local is what our economy needs right now. There's also a opportunity and plus side around a domestic focus because of the supply chain challenges. And so being able to access domestic products helps alleviate some of those challenges. And we spoke briefly about friendly trading partners and that those are a great stop for new markets and imports. And in many cases, the Canadian government is well positioned to support introductions and facilitate companies expanding. The political and economic stability also makes a big difference. And so obviously we've seen considerable disruption in the US, but to ensure that if you're expanding into a new market, that you're unlikely to have the same impact on stability in the future. And supporting local matters to our economy, as I've alluded to. It's a pretty jarring stat, but for every $1 spent at a local business, 66 cents stays in the community, versus at a multinational, 11 cents stays in the community. So the ripple effect of being able to update things like your procurement policies to support your neighbors goes a long way in helping us maintain a strong economy. There's several resources that help uncover just how to support local. There's lots of apps. The solution is always in an app. There's Shop Canadian, Buy Beaver, OS Canada, and Maple Scan that all help uncover what companies are producing Canadian goods or are Canadian owned. We've got lots of campaigns, including the Calgary Chamber's campaign around Keep It Canadian. So if you'd like to have your business listed on our website as a Canadian company, our contact information is at the end, and feel free to reach out. If you're in Edmonton, the Edmonton Chamber of Commerce has a similar portal. And there's an online directory that's quite comprehensive, Made in Canada. In terms of supporting your own business, there's lots of resources. There's several programs, tools, and networks that are available to you. And I'll talk specifically about a few resources and supports. The first one's around tax. And so GST and HST remittances and corporate income tax payments are in effect from April 2nd to June 30th. We'll see what the state of play is looking like at the end of June and whether that might extend. There's also an opportunity to request remission of tariffs that apply on certain goods from the US. And that is, there's two opportunities to request tariff remittance. There's situations where goods that are used as inputs can't be sourced domestically or outside of the US. So if you can't actually find what you need from somewhere other than the US, then you can request remittance. The other is on a case-by-case basis for exceptional circumstances that could have adverse effects on the Canadian economy. And so if there's some reason that the tariffs would have a considerable impact, then you can reach out to the Canadian government as well. And I understand they're also adding provisions for the auto sector on this in short order as well. There's lots of information on the Department of Finance website about how to apply. You send an email with the response to about 12 questions, and that allows you to request a remittance. The next resource I'll point to is around the Canada Tariff Finder. And if you just Google Canada Tariff Finder, this will obviously pop up. And on the left side, you can select whether you're exporting or importing, put in the country that you'd like to export to, and describe the product in as much detail. So I put in Australia and copper, and you click through some prompts, and it gives you information about the tariff. So as you're thinking about expanding into new markets, it's a great product to be able to help understand what tariffs are in place in around the world. Further to accessing new markets, the Trade Commissioner Service, which is offered through Global Affairs Canada, has several offerings to help navigate that process. And so here's a short list of some of the resources they offer. We spoke briefly about accessing capital. The Business Development Bank of Canada, or BDC, has a couple of programs to support with access to capital during this time. As we mentioned, we anticipate interest rates will continue to come down, but this offers very low interest loans. And same with the Canada Small Business Financing Program. So if you're looking at needing a little bit more seed capital to expand into new markets or pursue other opportunities, then these are both great sources for you. And I'd be, of course, remiss if I didn't plug the Chamber. We have resources on our website. We've got a whole page dedicated to US tariffs, what you need to know, the latest in the news. There's opportunities to get in touch with us from there if there's something that you're looking for, as well as lots of comprehensive policy recommendations and information on how to get in touch with government to talk to them about how they can support you. And of course, you can get in touch with us directly, either at our website or at policy@calgarychamber.com.
Perfect. Thank you, Ruhi. That actually kind of ties in well to a question here. Is Calgary Chamber kind of, or do you know of any other organizations planning or organizing sort of trade missions between provinces and having those conversations?
We've seen lots more, a lot more interest in the internal trade and being able to access different markets. I know Premier Smith is out in Eastern Canada today talking about just that. The Calgary Chamber, we've had outreaches from Northern Canada as well as from across the country on exactly that. Calgary Economic Development also does lots of that work. And so you'll find some more resources on our website about being able to expand into new markets. But certainly we have talked to the federal government about having trade missions right here at home rather than just abroad.
It's interesting. I mean, things move very quickly. Just as you're speaking there, Trump pauses higher tariffs for dozens of countries, but hikes China rate to 125%. So perhaps, as you mentioned there, China perhaps becoming the focus more than Canada. Yeah.
The news changes faster than we can keep up with.
Exactly, it does. Yeah, we see that there. And then there are a couple of kind of more technical technical things there. Tara just asks, can we provide the link? And we can look to do this, but just a bit more detailed information about that remittance process that you mentioned there. Would that be kind of through CRA or?
It's through the Department of Finance. And so if you just search for tariff remittance program, it'll come up and it's actually very clearly outlined. There's a specific email that you send it to and 12 questions that mostly cover kind of proof that you cannot find the good that you're looking for in Canada or in another market, indications of what exactly you are looking for, the quantities, when you need it by, those sorts of somewhat basic, though, of course, there's some kind of hoops to jump through given they're not likely to give out lots of remittances, but it's a fairly straightforward process. and detailed
Okay, yeah.
quite
Yeah,
well.
awesome. That's good. Yeah, there's a bit of a longer question here with regards to construction and purchase of equipment such as HVAC, restaurant equipment, other specialty materials. What are the recommendations, and are there any resources or contacts at EDC or the government who can help navigate alternate manufacturers or suppliers in Canada or in line with Canada's trade agreements? Yeah, what help is there for a business to go out and look at new suppliers?
That shop local slide that Matt, I'll circulate the deck as well that we can include with the recording. But that shop local slide has several resources, and many of them actually do have business focused goods. And so not just the coffee that you buy at the grocery store, but actually things like inputs related to HVAC, et cetera. And so the databases listed there will have some options for you.
Yeah, and presumably chambers play a role in this, like their directories and things like that. Those businesses, I'm guessing, are all kind of listed there and their services, etc.
Yes, exactly. Yeah, on our Keep It Canadian page, we have businesses that are based here or that sell products here, and we differentiate between Canadian owned and Canadian made because, of course, that's a big difference at this point as well, and want to ensure that there's some businesses that are American owned, but their full workforce and production happens north of the border, and so have marked those as made in Canada rather than Canadian owned. Of course, a big nuance there.
No, it becomes even we talked a little bit about kind of personal shopping, but there is a decision there, isn't there? And like there's this product and it's an American company, but it's sold and made in Canada, or it's made, in somewhere else, or maybe, and it's definitely it's a minefield for sure. Yeah. I like Levi's. What can I do? Um, yeah. One question, it's a little maybe technical, but you might be able to help on. Do you know about is it the de minimis rule where things can cross the border if it's below a certain level? Do you know if that's kind of active or suspended, or is that somewhere to go and
I
get
believe
advice?
it's active, but I'd have to
Yeah.
look into it. But I'm happy if someone wants to send a note through to that policy at calgarychamber.com note and we can review it.
Yeah, as you was kind of speaking, I did kind of look, and there's kind of uncertainty on it, and as well. So there'll probably be some settling on that as things go. Excellent. And a final question here. Lourdes asks, given interprovincial trade barriers, what other supports will be effective in supporting interprovincial trade besides missions? So what else is going to help us on this
Well,
interprovincial
I think
issue?
government is really looking for a level of understanding about what all of the barriers are. And so if you have a sense of a certain regulation that you'd like changed or updated so that it is easier to trade across borders, then please do get in touch with either the chamber or your government representative, either municipally, provincially, or federally. They're all interested in tackling this issue. We also anticipate that supply chains will make a big difference, and so have Canada's supply chain confidence has dropped considerably, I think from 10th to 26th in the last decade or so. And so hopefully being able to have better movement of goods across the country will really be able to support. And I think to tap into the chamber network. As the Calgary Chamber, we're well connected with every other big city chamber across the country, and the Canadian Chamber has a great network of chambers in rural areas as well. I think about 300 in their network, and can help you get in touch with other places that you're looking to grow and expand. And chambers can serve as your boots on the ground in places that you're interested in exploring.
Yeah, it's so true. No one's going to be the expert on those issues that the business face other than those businesses, because they see it, and many of the things that come across our desk and we hear about, like it comes kind of as a surprise because you're just not in it. Like the first aid kit example is such a perfect one. If you're not in that industry, as
You'd never think of it. Yeah. And the challenge with these barriers is that they exist across every government stream and department and regulation. And so just the amount of work required, I mean, businesses know it firsthand, the amount of work required to cross-reference it, all of the changes in different jurisdictions is very significant. And so government's in the process of doing that right now, but in many cases, businesses are living and breathing these challenges every day.
Yeah, I mean, we see it with even like municipally, like to have if you're a Calgary roofing company and you want to go and fix a roof in Airdrie, you need a City of Airdrie business license. They're separate things at a separate cost. And where we've seen that example in Southeast Alberta, Southwest Alberta, Crow's Nest Pass, Lethbridge, County of Lethbridge, they've gone for like a regional model, and I mean, it's exactly that. It's kind of removing irritants and trade barriers to that. Yeah. Yeah, I think we've got one other question here. Perhaps a final one. But what kind of grants are available to facilitate exporting to other countries?
And the business loan slide is the best place for that. And so BDC provides some capital. There's also an organization that is part of the federal government called Export from Canada, and they provide all sorts of supports and I believe have grants, certainly have loans, but I believe small grants as well. And so that's certainly a place to look.
Yeah. And also, if you're in Calgary, there's also the Trade Accelerator program, I think, run through Calgary Economic Development. Or
There has been. It is currently on hold. The funding expired and the federal government, given where it's at, has not confirmed yet whether that program will be continuing. So
you see, as I said it, I knew that you could sense the uncertainty in my voice. I kind of remembered that as I started speaking. Yeah. Perfect. Okay, well, awesome. I mean, if there are, I will do a final last check of any questions, and thank you for all the questions that have arrived in so far. Do we know of any specialist support? There's just one question here for Indigenous exporters and Indigenous business owners.
we haven't seen dedicated supports for Indigenous entrepreneurs right now, but there is an inclusive trade program through the federal government that isn't new with tariffs, but is designed to support businesses that traditionally have had difficulty with access to capital. And the Calgary Chamber and CCIB, the Canadian Council for Indigenous Businesses, have also put out some messaging and a bit of a campaign around buying Indigenous is buying Canadian. And so would certainly encourage folks to support buying Indigenous as well.
Yeah, perfect. Thank you so much, Ruhi. It's just such valuable. I feel like everything is something we could have an hour-long discussion on alone, each of those slides, and just such
Absolutely.
fascinating. Like the trade irritants thing. It's also fascinating. So thank you so much, and your expertise is definitely valued. And yeah, and just great, really, to share with everyone joining us today the kind of important role that chambers play in this discussion and advocating for small businesses and the small business community right throughout the province. Yeah. Perfect. Yeah. So I would like to, thank Ruhi and thank everyone for attending today. There's been really high quality questions, and it's the start of an important discussion that I know we're going to be having over the next few months, if not the next 4 years, potentially beyond as well. But thank you so much. It's really important to us that we have this feedback and learn from what we can improve and what we can maybe change for next time. So you'll get a survey after this webinar. In fact, I think it comes straight after it ends. There's going to be a question asked, but an email follow-up as well. So please take the time to provide that. It's really useful when we provide these free webinars to get that feedback. But other than that, really, from my point of view, it's just to say thank you so much and enjoy the rest of your day. Thank you, Ruhi.
Thank you, and thanks to everyone for tuning in.
Thanks now. Bye-bye, everyone.